Hey, welcome to Everything Money. Merck is in the news. You probably searched it on YouTube and found us. We're happy you're here. Merck is coming out with the COVID. Is it a vaccine pill, Mo, or what is it? It's a vaccine pill.
So it's a pill that actually is going to go and kind of replicate the virus, and it goes to the genetic code and it fills the nicks in the code with the drug instead of the virus, preventing it from replicating on top. It's pretty cool.
Yeah, it's interesting news. Obviously we're going to talk about it right now with This is a pharmaceutical company, Merck. It's very famous.
Huge.
Huge, yeah. And we're going to look at the We're going to look at the financials of Merck using our 8-pillar analysis and our software behind Paul. And we will show you the inside under the hood of Merck and where they're going in the future. Mo, they're all over their moving averages. There's some excitement behind this.
Yep.
So you might be wondering at home, is this a stock buy? We'll let you know right now. Paul, I welcome you in.
Thank you, Seth. Guys, follow us on Instagram. All this below. Please do. It helps out a lot. So guys, Merck is a pharmaceutical business. Mo will get into it, but the important part about pharmaceuticals to look at is what's their pipeline, what drugs are coming off of patent, because drugs aren't forever. I take a pill called finasteride, which is Propecia for my hair. But when I first started taking it 10 years ago, it was Propecia. Then
That's Merck.
Is that Merck?
Yeah.
Oh, there you go. That was completely dumb luck. I didn't even realize that. And then they lost the patent on it because it expires after so much time.
Is this for thinning hair?
No, it's for losing hair.
Oh, do you think I need it? Am I looking thin?
I'm not a doctor.
Well, both of your dads are.
Yeah,
so we are, right?
Yeah, so obviously I'm going to be.
Haven't you seen the internet? I mean,
so it's important to make sure, like that pill used to cost me $550 a year. Now it costs me $50 a year.
Oh, wow.
So you have to understand these generics coming out, et cetera. So let's look at Merck, $200 billion company, 5-year PE of 33, 1-year PE of 37. Immediately on a company this large, I immediately go, ugh, that's gross.
Well, it's funny, Paul. We were doing some videos of PEs in the 70s and 100s. It's almost
seems like a value play here.
it seems kind of nice. We're getting somewhere toward that 20 number, 37, 32.
Yeah, sick.
Okay.
5-year return on invested capital is 10.9%. We wanted over 9%, so that's a check. So far, 1x and 1 check, but here's an interesting thing. Their dividend is 3.1%. That's $6.4 billion. Their 5-year average free cash flow is 7.2. Last year, they did 5.3. So even on their 5-year average, that's like 90% of their free cash flow is going out to dividends. That's a big number. That scares me. That really scares me. So immediately I'm like, that's going to have to be cut at some point. Has it been cut already, Mo? Do you know?
The dividend?
Yeah?
I'm not sure. Let me
All
check.
right, let's go to the third pillar while Seth looks it up.
Yeah, this is revenue growth over the past 5 years. This is pillar number 3.
40 billion to 48 billion. So that's a check mark there. That's pretty good. But in the last 10 years, it's about even. Why? They might have lost some drugs. They might have done blah, 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 blah. Net income is our next pillar. We want to see 5-year net income growth. 5 billion to 5.57. Check mark there. It's all over the place here, though. Poop.
The company has never cut its dividend in 31 years, although there's a lot of articles saying be careful because they probably won't be able to pay for this much longer.
There's no cut yet.
Isn't that weird?
Yes.
It's just numbers, guys. If you have $10 coming in, you want to pay a $12 dividend?
Ain't happening.
It's just going to be hard. I mean, it's not sustainable. I'm not saying it ain't happening. They could do that, but they have to issue debt or take out of their cash reserves in order to pay that dividend, which can be done. Shares outstanding is our next pillar, pillar number 5. We want to see shares going down, and they are 2.72 down to 2.53. Check mark there.
Oh, they're going down.
Yeah. In fact, 10 years ago, they had 3 billion shares. Now they have 2.53.
Pillar number 6 is total long-term.
So really quick.
Oh, baby, go ahead.
They're buying back shares and paying a dividend.
Wait. Tell me. Well, you're rolling your eyes. What does that mean?
How? Oh. When they're paying out 90% of their free cash flow to a dividend, how do they have extra money to buy back shares unless they're issuing debt? Guys, money's got to be financed in some way, either through debt or equity. So how do they do it? Because if they're issuing 90% of their free cash flow out to buy back out to pay out dividends, where's the money coming from? And I just look at this going, I'm feeling antsy about this.
Antsy
now,
in your pantsy.
What we want to look at next is debt levels. What we do for my debt level for the pillar, we took the 5-year free cash flow of 7.23. I multiply it by 5. That's $36 billion. So I want long-term liabilities on the company to be under $36 billion. So I go to our trusty software right here behind me. I go to the balance sheet. I scroll all the way down, all the way down.
Nerdy stuff.
Oh my Lord.
What?
35.39. We want it less than 36. So the squeakiest of right in there for the check mark. Right in there.
Pillar number 7 is a grandpappy of them all. Free cash flow growth over the past 5.
Big poppy of them all?
Yes.
So we go, guys, I added this line to our software. You can't get this on any other software. We added the free cash flow line because it's cash from operations, less your capital expenditures. 8.51 down to 5.26. That's an X. And then I take the average, 7.23 for pillar number 8, multiply it by 20, $144 billion market cap. What this is saying is, this isn't saying it's worth 144 for sure. It's a starting point. It all depends on what are the growth rates, what's it looking like. Mo said earlier that their pipeline sucks. So to me, I want to pay a lower multiple if their pipeline sucks. But even with this, the market cap is actually 200 billion. So this is an X. Let's go to our 8 pillars tab where it does all of this for you if you just want to skip right to it. So this is what we look at right here. The valuations for a company that has pipeline issues and cash flow issues, like paying out dividends, the dividends have to be cut at some point. Or they have to figure out how they're going to sustain it. I have no idea.
I can't. What's their ROIC? I can't see it from here.
10.9.
Okay.
And drug companies tend to have a high ROIC.
Yeah.
Right? Because it doesn't take much equity to all of a sudden generate huge numbers.
Especially after your drugs are out there.
So what I would do is I go to the 10K. We're going to do stock analyzer tool after Mo's done with his charts. But for further research, I go to the 10K, see how many drugs they have in the phase 1, phase 2, and phase 3 levels. There, you can Google the percentages of each one happening. But you want their pipeline to be good. Like Biogen, we love Biogen's pipeline.
Yeah. I just remember looking at Merck back in the day, and I was like, I'm just underwhelmed by their pipeline. I reached out to a couple of physicians, including our fathers. Both of them are rather underwhelmed. So I remember looking at Merck specifically in January of this past year. So
if you're looking to trade this with Mo, you can join the Business Nation. That is our trading tier of our community. Go ahead, Mo. What are they doing over there?
So I usually don't start here, but I wanted to pull this out. So there was a gap that happened when that drug, the COVID pill, whatever it is, was announced. So this is your ideal flagpole pattern. And usually with flagpole patterns, they fall right back down. Well, now what's interesting about Merck is they came up here, and then what they created was a nice W formation. So this is looking really good. You don't see that very often. Usually you see this and then a fall right back to that previous price point. So that's pretty good for Merck of what they have going on. Now they're still in kind of a downtrend, waiting for something to happen. But let's go over to the daily chart and see what we can do here. So you're kind of starting your consolidation in this area. Everything's settling down. The volume has completely fallen off the table and declined. You're rolling into a downtrend. So now that I'm looking at the volume, Seth, I do think that this thing is eventually going to start trickling back down, and that W that was formed is not going to hold for quite a while, for a long period of time. But I can see it coming back to the moving averages. I could be totally wrong, but everything is indicating that this thing is going to fall back down, especially the volume, because the volume is the gasoline to the car or the plug-in to the EV.
That's right, Mo. Just a little slower process. Yeah, boy, it seems like the party's over already. For
it does. It was crazy. I mean, you had this average volume of 21 million shares traded per day. Then you jump up here to almost 75 million shares traded per day. And then, boom, it's just over. And it's like, man, okay, that was fast.
Paul, show us that stock analyzer tool how to figure out what price we should be paying for Merck.
So guys, if their pipeline stinks and they're losing a lot of drugs off of a patent, this might actually be not low enough. I'm doing revenue growth. This stock analyzer tool lets you put in all your assumptions. I put in a 7-year analysis, hit the top, put in all my assumptions, hit the analyze button. You can take a look at all these assumptions. Now, one thing I will say, drug companies, when they're in this position, when their pipelines stink, they've got to put a lot more money into research and development. That's why I think they're going to have to cut that dividend, because they have to go put a lot more money into acquiring other drugs from companies that come up with drug ideas so that way they can control them. I just don't think that dividend is sustainable if they really have a pipeline issue. I hit the analyze button. The stock's at 82. We want it at 30. And to be honest with you, I don't know if 30 is the right number. Because if you don't have the pipeline's everything for these drug companies. The pipeline is everything. So do your research, figure out what the pipeline looks like, go read what other medical experts are saying that are not attached to Merck, that have no bias in it, they're just giving their opinion on it. I just look at it going, it's an expensive company. Even if it had a decent pipeline, it looks like an expensive company. So I'm passing on Merck is my opinion.
If you want access to the data that we're providing, the software behind Paul, you can get access to us. You can trade with Mo, everything at everythingmoney.com or Patreon. Paul, tell them what they can receive for what they pay.
So everything you saw here is on a mobile app. You get that. You get all 8 pillars. You get 30 years of financial data. You get exclusive content. We send daily videos out to our subscribers. That way they can see other stocks that we're not even talking about on the channel. You get access to all 3 of us. You get real estate analyzer tool. All these things for 90 cents per day. That's less than a crappy cup of coffee. If you are serious about financials and investing, this is the absolute best. This will be your go-to for investing for the future. This is a no-brainer. Everythingmoney.com or Patreon. 90 cents a day, guys.
That's our take on Merck. Thanks for watching. Watch more videos. We've done 1,000 of them over the past 3 years. And we welcome you into commenting below. Fondle thumbs up on the way out. See you next video.